Well, guys, I'm up massively on a few stocks. I mean, we're up over 100% on DraftKings, up over 150% on Meta, and up over 60% on Tesla in just a few months. So maybe it's time to start taking some profits and kind of taking some money off the table. So let's talk about all that today. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. All right, so there's actually more stocks that we're up on, but there's three specifically that are just up massive. I mean, they're up 100, over 100%, over 150%, and up over 60%. And we just kind of need to discuss what happens when that happens to a stock in a very short time frame. I mean, it's not like these are speculative penny stocks or anything else like that. These are large, I guess DraftKings isn't, but the other two are large mega cap type stocks, and they've already had these types of runs in a very short period of time. We got multi-year gains during the worst ever crash, whatever the heck all the narrative was that was out there. We got multi-year gains in these stocks in just a very short period of time. And congrats to you guys out there and everybody in the group who was busy pouring money into it along with me when these stocks were so beaten down. Which, don't forget to sell for my group, which you would have seen all these buys in real time, is ending unless Tesla takes another big leg down. So make sure you check out the pinned comments, see everything that you get included with that. It's not just my buy and sell alerts, there's all kinds of things in there. And yes, you do also get those buy and sell alerts in real time. So make sure you check out that pinned comment, see everything that's included and see if it's right for you before that sale ends. This was a hot topic in my group, so I decided to make a dedicated video in there for them, which I make, 3 to 5 dedicated videos for them in a week. But I thought it would be absolutely value added for you guys here since, if they're asking it in there, I know you guys have that question out here. So I kind of, condensed it down a little bit and kind of gave you guys the bottom line narrative with this, what I would do, how I would handle this situation, and kind of everything else involved. All right, guys, so let's talk about taking profits today, as I know a lot of you guys are really up in a lot of positions, especially Meta specifically is kind of the one that's come up over and over again in the group. And I just kind of want to discuss kind of all the broader points that are out there, because unfortunately what's out there in the media and everything else is a little bit different and a little bit of just may not be what you actually want to do, and you may not be considering all the different options that are out there for you, and more importantly, some other kind of scenarios and some other things that you may want to take a look at before actually taking profits or anything else. Now, to be upfront, I'm not saying that taking profits is wrong or it's a bad move or you shouldn't do it or anything else like that at all. That's not what I'm saying. I'm not saying there's not a viable time to do it. I'll give you an example of a time when I would do it personally, and I'm not saying that that is the only time you should do it. That's just a time specifically where I would choose to do it in this particular scenario where you have a stock run up big, you're up, double or more on a stock, and you kind of start thinking about, taking profits or trimming the position or whatever word you want to put in there. Doesn't matter. It all kind of comes from the same place. And so I kind of wanted to discuss that and kind of work through all the different nuances of, what I would do, why I would do it, and maybe some things for you to consider before you make that decision, moving forward. Because a lot of you guys thought you had years to make this decision, and it's returned very, very well over the course of, 6 to 8 months or so. So obviously you're in a very, very different scenario now to where you feel like you need to make decisions. And so let's talk through those decisions. I've noticed a lot of folks, bought a stock, hey, it's going to be a long-term hold. And now you're considered selling the stock or trading the stock or taking profits or whatever the case is. And that's okay. There's nothing necessarily wrong with that, but you have to acknowledge that you can't do both. You can have two different portfolios to do both. Your plan can change. You can absolutely plan to trade, but what you are doing is trading. The idea of trimming positions or taking my profits and waiting for it to go lower because it's had a nice run, you weren't long-term investing at that stage, and that's okay. I'm not saying it's wrong, just you got to kind of understand and be willing to acknowledge that, okay, now I am trading. Now you're not day trading, you're right, but you're absolutely trading versus long-term buy and hold investing. And those are two vastly different strategies. And that, again, it's not right or wrong or anything else like that, but they are two different strategies with two different outcomes. And you got to make sure you don't mix the two. Again, it's perfectly okay to make trades. I make trades sometimes. It's rare. I don't like to do them in down markets. But during hot markets, there's opportunities to make trades and to make swing trades. I call them swing trades. They're kind of modified swing trades. They're not the traditional swing trades, if I could talk. The other time that I would ever think about taking a long-term hold and turning it into a trade, now this is me personally. There's other scenarios out there. I agree. I'm not saying it's right or wrong, but you guys are coming to me, and this is the exact scenario where I would consider doing that on a long hold, a stock that I bought. I plan to hold for a long time. So I'm just going to use DraftKings as an example. It doesn't matter. Plug in whatever stock you want to plug in there. And, for me, DraftKings is still firmly in that speculative category. It's not like Tesla. It's not like others, Apple, whatever. It is firmly in that speculative category, and which means it is primed for, hype runs, right? We saw that in 2020, 2021. we saw huge runs in a lot of stocks, not just that one. There's other stocks that I own too that absolutely fall in that same category and had a huge run. And I'm sorry if DraftKings, let's say the market just went on a tear, for the next 6 months, and DraftKings ran up to, I don't know, 60, 80, whatever the case is. I want to hold it for the long term, but I know that would be significantly overvalued if it was much more just sentiment around, the hype around it, and the multiples are stupid and the price of sales is stupid and all these other things get stupid. I would sell it. I don't want to. That's one of my biggest problems with the Wall Street bets movement is it forces me out of positions that I don't want to be out of. I don't want to sell. I want to hold those things long term. There is, even when you sell and you make money and nobody's ever lost money taking a profit, you're right, but you pay taxes on that profit. And in my case, it's, 40+% that comes off. So I do lose money taking a profit, as opposed to if it just continues to run over the course of years and then decades, I'm getting those gains tax free, obviously, until I sell that stock. But the point is, in the meantime, I'm not paying taxes on that money and not losing that tax dollar and such. So when I'm looking at something like, DraftKings has a big hype run like that, it goes from, what is it, 20 something right now? Let's say it ran up to, I don't know, 50, 60, 80, whatever the number would be this summer, I would be selling it. Not because I don't believe in DraftKings, not because I don't think it's going to, be great long-term or anything else like that, but it is still in the speculative category. It's getting better. They're getting better. They are improving. They're working their way out of that category, but they're not all the way there yet. So I would have to treat it as such that, hey, I can't justify that valuation. And not even just justify the valuation, there's still a chance that DraftKings doesn't make it, right? It's speculative. It's speculative for a reason. I don't think that's going to happen. I don't think they're going to be bankrupt, but they're not out of the woods yet. They're clearly not. So it's not one of those things where I can say definitively, oh yeah, they'll be fine, 3 years from now. May not be here 3 years from now. Maybe they are. I think they will be, but I can't say that's definitive like I can with a Tesla or Apple. If Tesla ran up to 300 this summer, I wouldn't be selling. Ran up to 400 this summer, I wouldn't be selling, even though I think that would be a little bit overvalued for Tesla, especially with what they're doing right now with their profitability and such, basically by, decreasing their margins to take up market share and to continue to push vehicles out. Great long-term strategy. Short-term, I can't say, yeah, it's definitely worth 400 this summer. I just couldn't do that. But I have no interest in selling. I'm not going to sell because now I'm just trading Tesla and I have no desire to be a trader. I don't need that stress in my life. What I'll do is what I always do with long-term holds is I just stop buying. You guys have seen it lately. I was buy. I wasn't buying it when it's 400, 350, 300. Lots of people are asking me about it. I'm like, hey, I think long-term everybody's going to be fine. But for me, it's a little bit overvalued right now. And then I was buying a whole bunch, basically when I felt it got undervalued, under 250 or so is when I started buying. And then obviously, we got down to the stupid levels and it was just pour money into it. That's kind of the way that I handle those strategies instead of, basically quote unquote taking profits. And that kind of brings me all the way back to what was your plan in the first place? Was it a long-term hold where it was a great stock, great company, and you planned on holding it for 5 years, 10 years, whatever the time frame was? Doesn't even matter at this stage. Just was it a long hold to where you just kind of wanted to continue to hold the company? You think it's going to be great long-term and you want to continue to add to that over time? Or was it truly a trade in the first place? Was it truly just a, hey, I'm willing to buy it at 100, and if it gets up to 200, that was my sell point. There's nothing wrong with that, but I plan all that sort of stuff out. Whenever I know what I want out of a stock, I have that planned out ahead of time. I have it written down ahead of time. When I do a modified swing trade or whatever the heck you want to call it that I do, I'm buying and I know the dollar amount. When it hits, I'm selling. It's predetermined, so I don't have to think. I don't have to try to figure it out. And no, when it runs up after I sell, because inevitably you can't time the top, just like you can't time the bottom, I'm not worried about it. I didn't want to own the stock long term, and great, I got the money I expected out of the move, and I'm happy and I move on with life. That's it. That's the way you execute trades. That is how trading works. That is also why trading is so difficult. You don't want to put yourself in that scenario to where you're just trying to guess what price it would go, what price you want to sell at. And then inevitably, then you'll watch it, oh man, I sold too early. Look at it. And you kind of kick yourself. Now you feel bad. And even though you made money, and that's kind of where lack of planning kicked you in the butt in the first place. So that's why you plan and go back to that original plan. Sometimes when you have a stock go up or double up, it looks good, right? I mean, you're like, oh, look at all this money I just made on this stock. This is great. And now you're tempted to sell. And it's kind of like, well, wait a second. If you were planning on holding it for 5 years, maybe, let's say it went from 100 to 200 and you have it as a $300, $350 stock in 5 years. Why would you sell? Doesn't make any sense. Sure, all of a sudden you're sitting on a lot of money, but that's kind of like, the people that have money in their pockets, who always say, oh, the money's burning a hole in their pocket. They just got to spend it. It's kind of that same way. Are you feeling that way? Or is, hey, it's had a good run, so therefore the traders are all saying, hey, the run is overextended. Probably 100% true. It probably is. That doesn't mean that it's still not undervalued, one, and two, that you need to sell and try to trade it. The stocks don't go up in a straight line. They go up, they come back down. They go up, they come back down. Generally its trajectory over time is up, but there are going to be periods where it runs and you're going to have a month or two where it just can't seem to catch any traction. Then something else happens and it goes back up. Again, if you're trading, great. They're absolutely right. I'm sure with Meta, it is screaming signals that it should be sold because it's just overbought. It's on too good of a run. However, on the flip side, you could make the same case when it was when it finally broke over 100, got up to about 120 or so. The same traders were screaming the same thing. Ooh, might be time to take some profits here on Meta, looking pretty good. And then at 140, and then at 160, and then when it got up over 200, and now I don't even know where we're sitting right now. I don't know, what, 230? I don't remember. Of course, I say that and I'm on camera, so go figure. Yeah, we're sitting at like 240. But if you listen to those traders, the logical thing to do would be to have sold at 120 or 140. Hey, you managed to hold out and you managed to ride it to 160. Great. Maybe even 200, but you just missed out on another $40 up, momentum from doing that. That's why I don't trade. I don't want to play that game. Do I think it's overextended? Yeah. If you told me at 180, is it overextended? I would have said yes. So would all the traders. I guarantee you, Roberto can pull up charts for us and map all this sort of stuff out where there were multiple times where it was hitting resistance and it was time to sell the stock. Stocks get irrational to the upside and to the downside. And my job isn't to try to time those events. My job is just to understand how much money I need to put into that stock during those periods of time and understand when it's, overvalued or undervalued in regards to where I would like to add long term. That is part of being a long-term investor. So yeah, obviously for me at Meta, it's still at 240. If you're talking to me about long term, it's still undervalued. If I had to put a valuation on it, absolutely. Now, that doesn't mean that it can't fall back down to 180 because it's been on a crazy run. I don't know if it will or not. I have no idea. I have no desire either to try to figure it out and try to trade it. I just know I owned a lot of it before. It got so stupid low, it was like, oh my gosh, how can I not buy this stock at this price? This is just dumb. This is giving away money. We've talked about it a lot of times right here in this group. It's the easiest money you're going to make in the stock market was putting money into Meta back then. I know it didn't seem that way. That's not what the narrative was on TV or on YouTube or anywhere else. But those were facts. That was the reality. That was I saw something the other day where it said it's the greatest turnaround ever. And I'm like, no, it's not. Like all he had to do was just stop being dumb. like literally it was just pull your head out of the metaverse for 5 seconds, see what's going on in your company, make a few tweaks, change a few things, basically lean up your manning, your employee base, quit paying people $250K to sit at home and actually not have jobs. Like they literally didn't have jobs. And what do you know? And you were already printing cash anyways. What do you know? You're printing even more cash now. So those type things like that, you've got to kind of not only understand the opportunity that's in front of you right there in a situation like that whenever it's low, but also just because it runs up to the 140, 180 and the traders are saying trade it, that might be the right trade. But that does not make it the right move for a long-term buy and hold investor if you truly intended to hold it for the long term. Now remember too, when you go to sell, you got to pay taxes. And then you've got to do two things. One, you've got to try to guess somewhere near the top of whatever the heck run it's on. Two, you've got to pay taxes on that money, regardless of what happens to the stock next. Well, I guess, two, you've got to actually find your new entry point. So not only do you got to hit the exit point, right? You got to find the new entry point. Whatever the heck that gain was when you sold from when you bought, you've got to pay taxes on that. And oh, by the way, if you get your entry point wrong and it drops another percentage, you're now down in that position and you still have a tax bill at the end of the year. Now, at least here in the US, that's exactly how it works. And that to me is a lot of stress. That's a lot of, I don't know what else you want to call it. To me, that's a lot of things I have to get right in order to make a lot of money on a stock. And to continue to make money, I have to continue to get in and out and pay the taxes and get in and out and pay the taxes. It's a constant thing that I have to do and I have to get right multiple times. As opposed to all I got to do is just get the entry point right at the beginning and I'm fine, and average your way into it, build out your position to full, and you're done. You don't have to do anything else. Time and compounding take care of everything else for you. So here, let me give you a long-term example of how this plays out. I know some of you guys have heard it a lot. I apologize, but it's the best example I can give in regards to the power of compounding, why Warren Buffett talks about it, why he doesn't do all the other games that everybody else does, and everybody else kind of seems like wants to do all the time. And that would be Apple. I sold half of my Apple stake. I bought it way back 2002, which by the way, did not time the bottom at all. It actually dipped 40% after I bought it. But after it finally recovered, I I was up 30%, so I sold half of it. I took my gains per se. I took some profits. Nobody's ever lost money taking profits. All those other things that you hear people say, I took. I made $600. Back then, that was a lot of money for me, and I felt kind of like a stud, like I knew what I was doing. Like, hey man, I got this. The shares that I sold to make that $600 today would be worth over 7 figures. That's millions, guys. That's how much money those shares would be worth. And guess what I had to do to earn, or I guess receive, or have that $1 million figure additional in my account? Nothing. Zero. All I had to do was just hold. That's it. There's no way you can tell me that I could have cashed out that money plus the 600, then bought another stock and then traded it to another 600, and then in perpetuity did that over the course of the next 20 years and had that same amount, turn that, that dollar amount, whatever the heck the number was at the time, into, $1 million. Here we are, 20 something years later. There's no way I could have done that, paid all the taxes in between, done all the other things. I was just working against myself when all I had to do was just hold. That's it. Maybe the people like that excitement. I don't know. But there's, my risk in holding was a heck of a lot less than trying to get multiple entry points and exit points, once a year, once every 2 years, once every, or once, 3 times a year, 4 times a year. I've got to get both those points right. I didn't even get the entry point right in the first place. That's the beauty of it. I got it wrong. I was wrong by 40%. That's how bad I was at my entry point in Apple back then. And it still paid off over time. And that's what great stocks do to you. You don't have to do anything. You just hold them. Now, I understand some of the other, reasons to do it. Maybe something fundamentally changes with the company. Who knows? There are other reasons to actually sell. But Apple at no point in time gave me any reason to sell other than the stock was just up and a little bit, in my mind, overvalued. And so I took some profits. I made the right move so that way I could take it and reinvest it and try to grow it over time. And the best move would have been to just hold. And that kind of leads me to the next point is if you're doing this because you don't have enough money to, invest in the first place, that's to where I'm not saying I haven't done it before. I'm not saying it's necessarily the wrong move, but you're not addressing the actual problem, which is you've not solved the money problem yet. Now, maybe you're in the process of solving the money problem. Okay, understand that. But a lot of folks, not all, but a lot of folks are trying to trade to solve their money problem instead of looking at their budget and cutting a lot of stuff, instead of taking on a side hustle or a second job or something else to, have more money to invest each month. Making some of those hard choices to, cut back on expenses or, sell a car and downgrade a car or house hack, like we talk about in the real estate course. Those are all things that solve the money problem. Trading does not solve your money problem. It just means at some point in time, you're going to trade to pay a bill. You're going to sell a stock to pay a bill. You're going to, something's going to happen and you're going to do this or that. Now, I'm not saying those are necessarily the wrong moves. That's the beauty of having investments is you are able to use them to help bail yourself out. But if it's 2 years from now and you haven't solved your money problem over the course of this past 2 years, that is a problem. That is something to me whenever I'm talking to folks and specifically about this and why. A lot of times it's because I just want more money to buy the better deals. And it's like, okay, I see where you're going and I don't disagree with the strategy. However, let's look at the money problem too, because if you're not simultaneously trying to solve that, you're just going to be a trader because you've never solved the problem in the first place. And then eventually your trading becomes a way to pay your bills or to take a vacation, or in some cases, take care of emergencies or maybe some other bad scenarios that happen instead of actually solving the money problem in the first place, which is a problem in the first place. So those are all kind of things that, as I think about this, that you have to think about. And don't let the idea of my stock's up 100%, 200%, whatever the case is. So that's my question. Just like whenever they're down. So cool. Tesla went from 400 to 100, down 75%, pretty much, from its all-time high. So again, my plan for Tesla is long-term. Great. I bought more. That's what I should have done. That's what investors do. I had no desire to trade that. Now, I'm not saying there's not a strategy to trading. I'm not saying any of these other things like that are necessarily wrong, but you need to implement that strategy just like your plan before you ever get started. That should have been your plan when Tesla was at 400. If it gets down to here, I'm going to sell options and, buy back in here. Lay all that out ahead of time. That's great. But doing these things in the moment, doing these things because a number up or down creates an emotion where you feel like you need to sell. Or, I guess you feel like selling both ways, right? When it's up so big, you feel like you want to sell and take some of that money, take some of those profits off the table. And same thing when it's down, you kind of want to sell because it's just going to go lower, right? until it doesn't. And then you would have wished you would have bought more and not sold. And a lot of folks are in that boat right now with a lot of different stocks. Those are just kind of the things I want you guys to consider and understand. I'm not saying it's right or wrong. To me, comes much more down to the plan and the reason why you're doing it in the first place. And you got to think real hard about the reason, because it's not as simple as it seems on the surface. And if it's the idea of I'm just taking profits, no problem. Understand that you're trading. That's just be willing to acknowledge that, and that's okay. And sometimes that kind of helps people reframe that. Oh yeah, you're right. I was planning on holding this for the next 5 years. Why don't I just stop buying that? I'm going to focus on another stock. Or maybe hey, that position's full. I'm not even going to deal with it anymore. Lock it away. Time is your best friend as a long-term buy and hold investor. That's why I love time. I read that from Warren Buffett 20-something years ago, and it's held true for the 20-something cents, and it was true for his, 70 years worth, 75 years worth of investing. It's held true. And I don't know, until, compounding doesn't continue to be a thing and isn't math anymore, which is probably impossible, it's always going to be a thing, and it's always going to be your friend when it comes down to investing. So, and remember, if you want to see all my buys in real time, just like the 3 that we just talked about today, or you want to see my watch list with price targets, we got 5 courses for free that cover everything from real estate, mastering your money, the stock market, anything else you can, mindset, anything else you can think of, and a whole ton more. The best Discord group. You can slide into my DMs. We do live Q&As. More is included in there than any other group out there for the price. I can guarantee you that. So make sure you check out the pinned comment and see if it's right for you. And click this video here if you want to see the stocks I'm buying now, and click here to see my exact plan for this market right now. So thanks for watching, and we'll see you in the next one.